Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Really nice drop we had on Friday, September 15th. Really nice drop here. We've been talking about seasonality. I haven't updated this picture yet, but we are here now, guys. We are in the mid-September, September 15th. I was actually thinking the drop was going to happen this week or tomorrow or something like that. Today is Sunday, September 17th. I was thinking it was going to drop tomorrow, but I don't mind pleasant surprises because that was a very nice move we had on Friday. I did write on my Discord, I always give the levels out. And we look to short breakdowns of support, long breakouts of resistance. That's usually the core setup, along with the false breakout and false breakdown. What was the first post of the day or second post of the day? I put 447 as first support, and as long as above, bulls need to recapture 449 to trigger longs. If 447, which was around the 50 DMA, and my fib level was lost, then we had lower targets incoming. So we were just looking to react, whether to the upside or to the downside. And you see on the 30-minute chart here, this pink line right here was my 447 level. This was the market open around 9:30, and it just gave us this beautiful breakdown, and it just went as low as 443-ish towards the end of the day. It was an amazing move, a nice drop to the downside. It looks like it is tracking with seasonality, with the second half of September. I've said it multiple times, with the second half of September being a bearish one. This year, I thought it was going to come in early this week, but it came in on time. September 15th is technically the start of the second half of September. 30 days in September, April, June, and November, all that happy stuff. And we lost some pretty critical support levels, right? First thing I want to talk about is the June high levels, around 444, that was lost. That's a breakdown. And you guys see my triangle pattern. As long as below 444, I am favoring that we fill to the bottom. We fill this triangle to the bottom, which means we could drop down to below 441. Around the support is at 440.6s. Okay? And then below that, if that breaks down, that's a breakdown of the triangle pattern that will put 439 in play. My white trend line, as I've mentioned to you guys multiple times, white trend line starting back from February 2nd. Break that down, be very bearish. Okay, so overall, for this week, for Monday at least, we take it one day at a time. For Monday at least, I am bearish as long as below 444, and I do favor we drop down to the 440.6 to the 441 zone. And if that fails as support, we could get a bounce there based on the triangle pattern. But if it fails, 439, 437.5, and 436 below. Keep in mind, as long as we are dropping to the downside, we could get, a little retracement or something. But as long as we are bearish, this tracks with seasonality, and the average tendency for SPY in the second half of September is very bearish. Is it guaranteed that it'll drop? No, it's not a guarantee, because it can be wrong sometimes, right? Seasonality can be wrong. But that's the tendency, all right, based on the last 20 years, the average of the last 20 years. I don't like to give out predictions and stuff like that. But if I am going to try to talk about the future, I'd rather use, data to help me out here, like the seasonality. And so far, it's been pretty decent, all right? And, that big drop coming in mid-September, that aligns with SPY's average tendency, okay? So overall, stay bearish below 444. If we do get a pop or retracement, I'd like to see 445.5 or 447 highest defend as resistant. Preferably we don't pop up, but it's not that I'm bearish. I just want some volatile price action with nice movements, okay? That's all I want. But yeah, overall, no higher than 447 to stay bearish. Staying below 444 would be great. And maybe some follow through tomorrow would be to test the triangle pattern. All right, you guys got my support levels. If it failed, like I said, play it level to level. One support level failed, that means the next support is in play, all right? You don't call a bottom, but you can try to play false breakdown setup. It's better to follow the trend. Most retail traders do not follow the trend. Most retail traders like to counter trade for some reason. But preferably, my recommendation is following the trend. Yeah. But above 447, well, above 444 would be a bullish warning. But a recapture of the 50 daily moving average would definitely be pretty bearish. Could be a double bottom here or something like that. And maybe we can go back and test the top of the triangle pattern, which is all the way up at 451.7. Long ways to go. But bear case can't really start, in my opinion, unless first 444 is recaptured and then a recapture of the 50 daily moving average above 447. Maybe we could get a squeeze to the upside. All right, so approach this sheepish and stay unbiased and be ready for anything. I know it's looking bearish right now. Seasonality is suggesting that we would be bearish, which we've talked about for a little while, and it's so far playing out. But you know, you gotta be careful. All right, defend those profits if you are in profits. So let's keep it simple. Below 444, bearish. Above 444, maybe we get some type of retracement or relief bounce. But above 447, bullish. Okay, that's the 50 daily moving average. Does that make sense? I hope that made sense. Triple Q, it lost that 50 daily moving average. As long as below the 50 daily moving average, that's bearish, which is around 373. We also lost the 50% fib level around 371.3-ish. As long as below, let's see if we can get that third touch of the triangle support, which is around 369. If 369 fail, Triple Q is in breakdown mode. Very bearish below 369 with 367.4. 367.4, 366 gap fill at 364, and then 362.5. That's a fib level below. Can't get bullish unless we recapture that 50 daily moving average. Okay, a recapture of 371.3 fib level would be a bullish warning or a potential bounce warning, but a recapture of the 50 would definitely be a lot more bearish, and maybe we could go test the top of the triangle pattern around 378.7-ish. Okay, but otherwise, let's follow the price action. Overall bearish as long as below the 50 daily moving average. Watch that breakdown of 369. Potential bounce there, but I trust no bounce unless critical resistant levels clear. Otherwise, if it breaks down, look to short. Bears in control. Dow Jones been a little ahead of the game. That's why I keep tracking. I don't often trade Dow Jones, but I like to track it. And unlike SPY and Triple Q, Dow Jones actually gave us the breakdown of its triangle pattern, as you guys can see here. So Dow Jones is actually in breakdown mode. As long as below 346.5, I am bearish on Dow Jones. Dow Jones is in breakdown mode. All right, follow through would be go down to break the 344 and 342.5 level, or at least test them. But breaking them down would be definitely be very bearish, and your trigger, our trigger, to be short if you're not already short based on this breakdown. Okay, no longs unless 346.5 to the 347 zone recapture. We'll give it a zone. Okay, gotta recapture the triangle pattern and the fib level. False breakdown setup, then maybe we'll go long there with 349 and 351 back in play. But otherwise, as long as below 346.5, I recommend staying bearish on the Dow Jones. IWM still overall looking bearish. It could not recapture that fib level, 23.6 fib level at 185.6. That's the only way I'll be short-term bullish on IWM, is if that level recaptures to put 188 and 190 plus in play. Otherwise, as long as below 185.6, I'm overall bearish. You keep bouncing around that 183 zone. Little washes below it, but just no official breakdown. But if we can get that official breakdown, that will be bearish. Follow through at 181.6, 180 or lower in play, okay? So above 185.6, potentially bullish. Need that close below 183 to finally be a little more bearish. I'm overall bearish, but we could be more bearish when these levels break down. Tesla, we're testing that 38.2 fib level around 277-ish. Okay, we did gap above it on Friday, but intraday it just broke it down. It was a beautiful trade setup, broke down 277, went as low as 271. Very nice move to the downside, an intraday day trading move, but so far it bounced around 271 level, a dollar higher than my multi-year trend line, as well as my 50% fib level at 270. I can't get bearish on Tesla unless we break down 270 for the false breakout setup based on the multi-year trend line and the fib level. And breaking down 268 would definitely help that out as well to show follow through and trigger more downside, potentially down to 263 and maybe 260-ish. But as of right now, we hit a critical level. As long as above 270, is it possible we base a little bit to build strength for the breakout? Above 277 would be very bearish for Tesla. Put in 279, 280, 283.6, and 285.5-ish in play above, all right? Apple, it's looking like it's consolidating. Head and shoulder. Does this look like a head and shoulder? Head, left shoulder, right shoulder. If that's the case, I like to see 173.5 break down. You guys see we got a bunch of bounce here, bounce there. 173.5 breakdown, that's bearish. Put in 172 and 170 in play. Below 172 would be pretty bear bias in my opinion, okay? Can't get bullish unless 178 and that's once again 180.7 recaptures. Unless those levels recapture, I can't get bullish on Apple. NVDA, extremely bearish. We had a beautiful trade idea on NVDA. I wrote here overall bears below 457.5. From here, loss of 454, 451, and 449 would be bearish. Trigger to go short and put the lower targets in play. And holy moly, NVDA did not disappoint. Breaking down 454, breaking down 451, breaking down 449, going down as low as 437-ish. And look at this. You guys see my orange triangle pattern? We broke back below it. That's a false breakout. All right, and it, I have the 1.236 fib level at 437, and NVDA decided to close just above that. So 437 is lost. 433.3-ish. Well, 433 would be in play based on this triangle pattern support. Bulls might step up there around 433, but I'll only trust it if it bounces and it recaptures some resistant levels. 437 would be its support right now, but if it breaks below, that needs to recapture a false breakdown of that level. Or from here, we can recapture 440 and 443, or break back out 445.6. That's the triangle pattern. That would be bullish. All right, recapture some levels. 440, 443, 445.6. 447, 448. 449. Those resistant levels. 449, 447, 445.6, 443, 440. Those are resistant levels. I repeated them so you guys can add them to your charts. Otherwise, this breakdown support 437 could be bearish. Put in 433, 429.6, 426.5-ish, 423.6s. Those would be support levels, all right? Loss of 437 would be bearish, especially loss of 433 because that is a breakdown of this trend line that I have here, okay? Microsoft got that breakdown. What were we bear flagging? Got the breakdown. Broke down 335.5. Holy moly, what a beautiful move. As long as below 331.5, 331. Just 331. As long as below 331, next targets are 329 and 327 for Microsoft. Below 327 would be a very big bearish follow through, putting lower targets in play. 325, 323.5, possibly down to 322-ish. All right. Can't get bullish unless we recapture some levels starting with 331, 334, and 335.5. Otherwise, stay bearish. Amazon gave us a nice move to the upside, but Friday gave us a beautiful move to the downside. Okay, we broke down the 78.6 fib around 140.5 to the 141 zone. As long as below that zone, I'm bearish on Amazon, and I'm favoring 138.6 and 137 with 135 below that. Okay, can't get bullish unless 141 is clear. or preferably 142 to put 143.6, 145, and 146.7 back in play. Google. Interesting. Google has an inside daily candle. Didn't quite broke back below my descending triangle pattern here, the pink one. But we do have an inside daily candle. The range is 139.5 to 137. Okay, the range is 139.5 to 137. Break of this range should give us the next directional move for Google. That's where you want to swing to if you plan on swinging. So swing shorts below 137 with 136.4, 134.8. Bottom of the triangle pattern is at 134. And if that breaks down, 132.8. Gap fill at 132. Wow, clusters of supports here. And then 129.5 below that, okay? Staying above 138 is overall bullish, but a breakout of 139.5 would be the follow through, putting 140.3 and 142 in play for Google. All right, Meta, what a beautiful breakdown. We close above that 309 level. False breakout setup, dropping as low as 298.7 ish. Amazing. Overall, as long as below 300, I am bearish. Watch the breakdown of the next support at 298.5. That would put 297 in play first, with 295 and 293.5 below that. All right. Resistant is at 301.5 and 303.5 and 305. Those resistance must clear to recapture those levels to put 307.5 and 309 back in play. Above 309, I would be bullish because that's where the big sell-off started for Meta, around 309. All right, overall bears below it. If we can somehow recapture it, then it's bullish. But bulls would have a lot of work to do, and right now it's not looking good for them. Netflix, beautiful move to the downside on Netflix. Gave you guys the level breakdown of 437.5 back on Tuesday. It showed a lot of follow through, even on Friday, going as low as 395-ish. Okay, I'm overall bearish on it, below falls 1.6. That's my 123.6 fib level. Overall bearish below for 1.6. Okay, critical support is at 396. All right, if we can break 396, this waterfall type move can get a lot worse. All right, you could probably head down to 393, 390-ish, and there is a gap fill. Well, before I get to the gap fill, this 383.5. There is the gap fill, 379.4. It's a long ways to go, but based on Netflix recent price action, it's possible it could get filled. All right, overall bears below 41.6. Those are the targets. If we can recapture 41.6, then maybe we'll get a relief bounce. 404 and 406 are also resistant levels. Recapturing those levels would definitely be a more bullish sign that we can get a relief rally. Maybe back up to 415.3. I'd be surprised if we break back above 415.3. But if we do, don't argue with the price action. That would put 419.5 to 420 back in play, with 421.5 and 425 and 426.5 above that. All right. AMD showing follow through after rejecting from my yellow trend line. I mentioned watch that breakdown of 105. Below 107.3 was 107.4 was overall bearish. Watch that breakdown of 105. It gave us a nice move, going as low as 101.2 ish. All right. Resistance now is at 103.5. If that resistance level can hold, that keeps 101.5, 99.5 in play, with 96.5 below that. All right, I can't get bullish unless we get a false breakdown setup. Short-term bullish would be a recapture of 103.5 and especially 105. But for longer-term bullish, it would need the breakout of the yellow trend line. That means above 107.4 to put 109 and 112 in play. Possibly higher because we're in breakout mode. But overall, as long as below 105 and 103.5, stay bearish. Okay, here's the dark pool order, 448.77. 1 billion in premium. This institution must have made good money. Let's take a look at the option flow. Filter for 500K premiums or above. I hope this doesn't crash on me. SPY is bearish. Triple Q is bearish. Dow Jones is nothing. IWM is nothing. Alright, no one trading IWM. Tesla is bullish. Apple, bearish. NVDA, bullish. Microsoft, oops. Microsoft is 50.7 for calls, 49.3 for puts. Pretty mixed. The calls is in block order. The puts are in sweeps. Expiration date September 22nd. That's coming up. While the calls is for next year. So I'm gonna lean bearish on Microsoft. Amazon bullish. Google nothing. Alphabet. Google with the L is bullish. Wow, and they're both sweep orders. Okay. Meta, bearish. Bearish, huh? Okay. And Netflix. Nothing for Netflix after an amazing move like that. AMD is bearish. Alright, guys. Thank you guys so much for watching. Please consider joining my Discord if you want more content from Uncle Charters. Other than that, have a great evening. Good luck this week, and I'll see you on the next video. Peace.